All right, hello, good morning, good evening, and good night. I hope you guys are doing absolutely fantastic because in today's video, what we're going to be doing is we're going to be talking about Zim Integrated Shipping, ticker symbol ZIM. And the reason being is because they just released their Q3 earnings. So what we're going to do in this video is we're going to go over their Q3 earnings. We're going to go over some comments made by their CEO, Mr. Ilya Glickman, about kind of Zim's future. We're just going to go over really one comment that I want to bring out here that he mentioned, nothing too crazy, a little bit about their fleet in the future. We're going to go over also global container shipping prices and how we expect that to kind of go in the future. And yeah, it's going to be an overview of Zim, their Q3 earnings, just everything about them, my current view on them. Will I be buying? Will I be selling? What will I do? Because I'm actually a holder of about 26 shares of Zim. It is currently my worst performing stock. I'm down 75%. I put a total investment of about $750 and that's turned to under $200. So in this video, I'm going to share with you my thoughts on Zim, everything about them and their Q3 earnings. But before we get into that, I do want to say, please do subscribe if you haven't already done so. We're up to 3,344 subscribers. In the last video, we're up to 3,332. We completely blew past this 3,333 marker. So I want to say thank you to everyone who had subscribed in that last video. And by the way, before I get into this one, I do want to say I'm looking to create an online dividend education course. Up here I said education for dummies, but you guys aren't dummies, so I had to change it to dividends for smarties, because anyone who's looking to take control of their financial future is truly a smarty and a smart person in my opinion. Now, if you guys have any ideas on what you guys want to see in this online dividend course, you guys just let me know and I will definitely get into it. And they're going to be similar styles to my videos right now, just me talking over a screen and then kind of introducing you how I go over, let's say, my dividend stocks, what I look for, how do I find high dividend stocks, anything like that. Every year I try to do something different. Last year it was Amazon with some baseballs. This year it's going to be a course and, of course, our YouTube channel. So without further ado, thank you for listening to that, but we're getting into Zim Integrated Shipping. So Zim is trading at a current share price of about $7.10. You can see over the past year, they've had pretty much a 80 to 90% decline, going from about $70 at their high, $85 at their high, down to $7. Now, this stock has obviously traded pretty downwards for the last little while. And if you were shorting the stock, you probably would have made a lot of money. And the reason being is because global shipping prices have had such a massive run up in 2020 to 2021, and they have pretty much declined since then, pretty much back to previous levels. But the reason for this massive run up was obviously due to COVID and due to people not being able to receive their products, people willing to kind of pay more in order to receive their products during COVID, because everything was shut down. Nobody was able to get anything. There was a lot of demand and barely any supply, and that's why this had this absolute massive run up to an absurd level of about $10,000 per 40-foot container ship. Now, going back to our previous levels, we're back down to roughly about the $1,500 range, and some of the reasons for Zim's Q3 earnings, they actually came out less than expected, or kind of about the same as the last quarter. Some of the reasons for this kind of downtrend in Zim's container shipping business is due to the global recession fears that people kind of have around, just around the world right now. So freight rates have continued to fall due to global trade volumes slow as a result of shrinking demand for goods. So this shrinking demands, people are becoming more conservative. They don't know whether we're going into a recession or not. In my current opinion, I do think that shipping as a whole is kind of already in a little bit of a recession. We see this not only in the price decline of Zim, but just due to the fact that global shipping prices, they're kind of returning back to normal, but we've had a lot of inflation, so really these numbers should be a lot higher in my opinion, closer to 2,000, 2,500 range. But there's a lot of concern around a recession, and the demand is shrinking. And when demand shrinks, prices like the Drewry, which track the Global Container Freight Shipping Index, will fall. Now, Zim's Integrated Shipping's Q3 earnings are a reflection of this. You can see here, one good thing is that their carried volume last year in Q3, when they had about 842,000 TEUs being carried, they were actually making really good money. Their operating income was 1.5 billion for that quarter, and in this quarter it was negative 2.2 billion. Negative 2.2 billion. There is a reason for that. It wasn't negative 2.2 billion just off of like operations, but it was due to the fact that their net assets, they had to kind of reintroduce their net assets into this. It's hard for me to explain, but basically this whole 2 billion loss is not a 2 billion loss. It's kind of their assets taking into account as well that they had to write off just due to the fact that they depreciated so much. Now going into their, so we can see their last quarter, you can see the Q2 earnings were about 1.3 billion, and they stayed kind of consistent here with the revenues at 1.273 billion. Now going to their, obviously their profit or loss, obviously that is a big hit. The $2.3 billion, you can see here was only $165 million loss, but they recorded a $2.3 billion loss, and I think that's also due to the fact that they wrote off close to a $2 billion asset decline. Now going into what I want to show you here is their cash flow. So one thing that's really good is you can see they're still making about $328 million in free cash flow. And that's something we want to see. Free cash flow is what the company has at the end of the quarter or end of the year. And that's money that they could use for whatever they want. So Zim has always been generating free cash flow. And the fact that it's actually generated more free cash flow, slightly more than even the last quarter, is fantastic. And when you're generating about $328 million in free cash flow, your market cap is roughly about 851 million. I think that is a really good sign. I understand that obviously their income, their net income loss of 2.2 billion says otherwise, but the fact that they are making free cash flow is still good, shows that the business is still profitable even in these times. Now, one thing to also note is how much their carrier volume is. Now, in Q3, when they were going through this kind of boom in the shipping industry and prices were really inclining, as you can see here, this is kind of the Q3 levels right here where it was at 10,000 and 9,000. You can see that they were actually carrying less shipping volume than they were today, meaning that they're growing their fleet, but also they're being able to have a little bit more demand. Now, the thing was, due to the prices in shipping, that's why obviously their Q3 results from last year are so much better. But the fact that they are carrying a little bit more in this quarter compared to last year's Q3 earnings is really amazing. That is a good sign we want to see. Now, one thing I do want to point out is the comments made by Ilya Glickman. He said, as we considered Zim's strategic direction back in 2021, we anticipated the subsequent years 2023 and 2024 were going to be a transition period. The goal was to shift Zim's reliance on older, less fuel efficient and less environmentally friendly capacity to core, cost, and fuel efficient LNG powered new build fleet. And what are LNG powered? LNG is just basically a dual engine. It basically uses cooled natural gas and bunker fuel to convert chemical energy into mechanical energy. I know that's obviously probably not the definition you want to hear, but they're basically vehicles which work on gasoline powered operations, pretty much like a combustion engine. Now, most ships are not necessarily environmentally friendly, but that is one step that is looking in the right direction for Zim as they look to kind of bring in more LNG powered vessels into their fleet, roughly 2024 and 2025. Now, this new fleet will effectively position us to both address the carbonization agenda for the shipping industry and drive long-term profitable growth. Now, we probably won't see this growth within 2023. We haven't seen the growth in 2023 or maybe parts of 2024, but going beyond then, Zim is anticipated to have a lot stronger fleet, a lot newer fleet, obviously, and be able to potentially cut down on some of their costs and become a little bit more environmentally friendly, which is obviously something that, we all want to see. But that is just some news going off of Zim. I do think that we are still in kind of a shipping recession when it comes to Zim. I don't think that we've seen the upside, obviously, of Zim. I think these are also pretty attractive levels to buy Zim at, just due to the fact that they are trading at pretty much a 90% loss. If Zim was to become profitable, if shipping rates were to increase, not even like they were before, even to increase to levels such as like 2,000 for the global shipping rate freight rate index, if they were to increase to about 2,000, 2,500, I think we're going to see a massive increase in their total revenues and their net income, turning that positive, which could produce a dividend for Zim. My long-term hold with Zim would basically be, I want to see where Zim's price bottoms. Hopefully it obviously doesn't just trade to zero. Let me know what you guys think in the comments down below, where you think Zim might bottom. I think the point where Zim starts to see some kind of profitability in their earnings is when we're going to see a stop in the decline of Zim's stock price, and it's going to return positive. That way they're going to bring back the dividends, and whatever the dividends are, you're probably going to be receiving a pretty decent amount, a pretty decent yield on those dividends. So Zim is definitely going to be a long-term hold for me. It's a stock that I've been holding for a very long time, have an average cost per share of about $28.91. I have not been reinvesting anything back into Zim. I've kind of just held on to my shares, and that's what I will continue to do until I see a rebound in their earnings. That is kind of my overview for Zim Integrated Shipping, going over their Q3 earnings, how I thought they might perform in the future. I do think they will do well. They just kind of got to get through 2023 and 2024. And I think in the I think in the mid half of 2024, Zim should be able to recoup these earnings. So I'm interested to see all that play out. I hope you guys did enjoy this video. Please do subscribe if you haven't yet done so. We're up to 3,344 subscribers. Please do make any suggestions if you're interested to see anything with a dividend education online course. Anything that you guys want to know, anything that you guys want me to kind of uncover, I can do and make ideas in that course. I want to build this together, a platform where you guys can have a say, and then obviously I can introduce you guys to it. So I'm very excited for that and any kind of future videos that we create. So I want to say thank you for watching. I hope you guys have a great day, and I will see you guys in the next video.